Hello everyone. Hope you guys are doing great. So in my today's video, I will speak about the Concall summary of Tips Music and Polycab India Limited. So the way this video will go is I'm going to take you through their business model in very short, and then obviously talk about the main points which the management highlighted in the Concall, which is very important for us to know to see where the company is going and what the company is doing currently. Okay. So let's talk about Tips Music. I think with the name only, we can understand that their main business where they earn their revenue is through music, right? So they do music production, and obviously they stream their music through online platforms like YouTube Music, Apple Music, Savan, Spotify, through all these channels, where they earn around 80 to 85% of their revenue. And the remaining revenue comes from the film side of the business, where they produce the movies, they sell the rights, and they make money, right? And we need to understand these streaming platforms very important, because that's going to play a very important role when we are going to talk about the main highlights in the con call summary. So let's get into the con call summary. Okay. So the management has confirmed that the sales have increased by around 21% YOY to around 94 crores, and the profit has increased by 33% to 59 crores. And the management also confirmed that the 85% of the contribution for this revenue is coming from the old catalogs that they have, which is around more than 10 to 15 years old. And 15% is coming from the new catalog. This is very important. This shows that the old catalogs are maturing and the new catalogs have still a long way to go, which is definitely a good sign. And as I spoke about the streaming platform, the management confirmed that on YouTube, their number of subscribers grew to around 145 million. And they have a very good thing happening on YouTube. What the management has confirmed, that in YouTube, their shorts consumption far exceeds than any other digital formats. But they have a problem over there, because currently the revenue sharing model that they have with YouTube is a fixed model. So they get a fixed revenue, whatever happens on YouTube Shorts. So what they are trying to do is, like, in the next negotiation, which is going to happen in the next year, they are trying to change it to share of advertising revenue, because then what will happen? The number of views that happens on YouTube Short, their revenues will also increase accordingly. So let's see what the negotiation holds, and whether the company is able to negotiate with YouTube and change it to the revenue sharing model. Let's look into the guidance that they have given, right? So currently, the management has confirmed that they've increased their guidance for Q4 from 20% to 25%, which in short term looks as a good sign. But overall, if we take for the whole year, it is still way below the guidance that they had given. At the start of the year, management told that they will grow at the, through a pace of around 30% for the whole year. But even if they grow for the Q4 for 25%, their overall growth for the whole year will not be more than 20%. So, and management has confirmed that even though this year growth was not up to the expectation of what they guided at the start of the year, in the next year, they are definitely confident of doing a revenue growth of 25 to around 28% for FY27. And the main reason that they said for this growth is because they have 108 new releases coming up, comprising of 70 films and 38 non-film tracks. Okay. So now the most important thing is always, when analyzing a business and when following a business, is to keep track. Okay. To understand what their management is telling, are they doing it or not? So Tip News have told that for the Q4 they're going to do 25%, and for the next year they're going to do around 25 to 28%. All we need to do is just keep an eye on track. So let's talk about Polycab India. I think related to Polycab, everyone in India would have heard this word, because their cables and wires have literally been used in almost all the houses in India. So when we look into their business model, they are mainly into cables and wires. That's what contributes to around 88% of their revenue. The remaining 6% come from their FMEG business, which is fast moving electrical goods. You might have seen their fans, their lights, their switches. that contributes to around only 6% of the revenue, and the remaining revenue comes from their projects and from the exports that they do. So let's look into the con call summary. What did the management speak about and how were the results? Okay. So sales increased by around 46.12% to 7,636 crore, and PAT was up by around 36% to 630 crores. So management said that the reason the PAT was below the sales growth is because due to the increase in the raw materials, which is copper and aluminum. As we all know, that to make cables and wire, the main raw material which is used is copper and aluminum. Because of this increase in prices of these raw material, it impacted the profitability. So what management did is they decided to pass this extra cost not at one go to the customers, but in a staggering manner, like in phase by phase basis. So the main reason that they gave is like, yes, when they did this, it impacted the profitability in short term, but they did it from the long term perspective. Because from the long term perspective, if we see, it will protect the volume growth and it will help them gain market share. So management said they're looking forward, and that's why they have decided not to increase the prices at one go. But definitely in the longer term, they will pass on the cost and the profits will increase. And as management advised that the main growth was driven by the cables and wire segment. It grew by almost 50% for this quarter. I mean, that is amazing because Polycab is such a huge company, and at such a high base, they still grew at close to 50%. And if I take the segment wise breakup for Q3 FY26, 88% revenue was contributed by cables and wire business. FMEG contributed to around 6%. And obviously, the projects and the export contributed for the remaining 6%. And the most interesting thing that the management disclosed in the con call is that wires outperform cables during this quarter. So normally when we see their breakup of cables and wire, cables is the one which contributes more than the wires. But in this case, wire sales were more than the cable sales. And the other interesting thing that they spoke about is in the cable segment, generally they sell the products through the distributors and they sell it directly to the institutional companies. In this quarter, more sales were done to the institution rather than through the sales and distributors. So this shows that the big power companies and everything have a huge demand and they are directly buying from Polycab. Uh, and management is confident that this domestic demand will continue and will continue contributing to the growth in the coming quarter also. So they are very bullish. They don't see that this demand will die down and there will be any decrease in spot, but they are confident that for the fourth quarter, the demand will still grow and they'll be able to do well. Management confirmed that the capacity utilization stood at around 80% for this quarter. And because they are so confident for the Q4, they have increased the level of inventory. And obviously, any companies will increase the level of inventory only if they are confident that they will be able to sell it. Okay. So, in short, this is what the management of Polycab said. Now, all we have to see is let's see in Q4 whether what they said will happen or not. The inventory that they bought in such a high quantity, whether they'll be able to convert it into sales or not. So that is the most important thing to track and execute. I hope this video was useful and to all of you. Thank you and God bless you.